The four most dangerous words in investing. Stay tuned, traders. We're going to talk about that next. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Beautiful morning down on the coast in Perth. It's supposed to be 34 today, but it already feels like it's going to be a lot hotter than that. So talking about the four most dangerous words in investing, and that is something Sir John Templeton said, and that's this time it's going to be different. Whenever, if you've been around long enough and you've been through a few market booms and bubbles, the internet boom, you know, the mining boom, we're into another sort of possible bubble with the Bitcoin, and every week in trading, you know, I think as retail traders especially, we try to make a lot of money with a small trading account, and that plays on our emotional state and our ability to be practical and have a reasonable expectation in terms of staying emotionally oriented. And you know, reading this week about Bitcoin, yesterday there was 70 million in Bitcoin that was hacked, and they talk about the limited supply and the unlimited demand that's going to potentially take Bitcoin to $1 million and all these things. But something to really understand, I don't know a lot about Bitcoin, I don't trade it, I know that there's people who trade it, and it's been an absolutely insane market this year. I'm returning 15-fold already for 2017. But you know, it's like Taleb's book, The Black Swan. There'll be events and circumstances that will possibly at some point come in, whether it's the introduction of the futures trading. You know, there'll be something, because it's right now in a vertical trajectory. It's already, if you looked at Peter, if you've had a chance to see Peter Brandt's report on the history of Bitcoin trading, it fits classical charting principles to a T, and it's now in a vertical, not so much a blow off, but it's literally going straight up, and nothing is sustainable long term. You know, it's like whether you're trading on 5-minute charts, 15-minute charts, hourly charts, end of day, monthly, weekly, doesn't matter. You know, when you look at all these time frames, we could put blank charts up there, and all markets go through cycles. We could put them up there and you wouldn't be able to tell what time frame they were, but they all fit similar classical charting principles. And the point I'm trying to make today is that if you think that if you get into a trade or you get into a market and you're into a bull market or a bear market, you know, it's like William O'Neill said, the general consensus where the public is swaying, you know, usually that's where things are going to start to come unstuck, because the markets have already priced in the general consensus, and what seems too high for the majority and too risky will generally continue to go higher, and what seems too low or generally too low to the population will usually go lower, which is why you see people trying to buy lows and sell highs, and they tend to get hammered and smashed. And this is something to, you know, I've talked about in some of the other videos. One of the biggest things I learned from studying Al Brooks' material was, even on a 5-minute chart, whether you go to an end-of-day chart or hourly, whatever, you know, just using something as simple as the 20-period moving average, do not trade against the trend until that trend is going in the opposite direction, and that usually will end up in either some kind of you know, V bottom, V top, double bottom, double top, but there's always a second mouse that retests. You know, there'll be a micro trend line break and a retest of a high or a low, but people who try to sell tops and buy bottoms generally will get smashed, and you might get lucky once in a while, but regardless of how you approach that, and regardless of any euphoric state that a market's in, play great defense. And you know, as Bitcoin continues to charge higher, I think it hit 17,000 yesterday. You know, it doesn't matter where you get in, just know where your exit point is. As we've talked about, there's only two things you can control, and that's how much you're going to lose and how much you're going to make. So cut your losses, ride your winners, stay disciplined, stay focused. There's nothing new under the sun, Ecclesiastes. So Hopefully you got some value from today's video, traders. If you haven't done so, go to my homepage, staceyburktrading.com. Download my 7-step daily routine for high-performance traders. Ritualize yourself. Get yourself into the headspace of other great traders. Focus on constant progress. Build confidence, discipline, and a winning mindset to master the markets. Have a great trading week, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.